What is going on, everyone? Cody Goldsworthy here with NIT CPAs, the CPA firm for real estate professionals, because we save our clients thousands in taxes each year. Today, I want to talk about the biggest tax deduction that agents and brokers generally get. Maybe not a broker, especially if they're doing a lot of lead generation, but particularly agents, your biggest tax deduction is either the standard mileage rate or are taking the actual expense method on your vehicle. Now, I don't want to get into the nuance on which one you should choose or not. I just want to get into how important it is to track your mileage. And for some reason, a lot of agents and brokers and just honestly entrepreneurs in general, they think they're like getting picked on and this requirement doesn't apply to them. Go work in corporate America. Every time you do a business trip or you're traveling with your own vehicle, you have to submit expense reports with receipt support. You have to submit mileage. You have to talk about what the business purpose was, where you went to and from, right? Like it's a requirement no matter where you're at in business. It doesn't matter, just because you're an agent doesn't mean that you're being singled out in this. We all have to do this. And it can be really easy, but I guess what motivated me to speak on this today was I'm doing, we're in the middle of tax season. I'm going through tax returns, and I got two people on agents and brokers are on one end of the spectrum. Either they think they don't have to track mileage at all, and it's just like throwing gum at a wall and hoping it sticks. Like, put this down. Or it's people that won't take the mileage deduction at all because they got audited in the past, and they had to pay all those taxes back for that deduction, plus back taxes, plus interest, plus penalties, and they're just terrified to ever take it again. And they're both completely wrong. That's the wrong approach, no matter which way you look at it. Um, you know, it doesn't, there's different levels of support you can show when it comes to mileage, right? The gold standard is pulling out a T-sheet or whatever and writing down every single address you go to, what the mileage was, etc. And then the worst standard to go by is just whatever. Like I said, you're just kind of making stuff up out of thin air. Listen, the IRS, the reason that they audit mileage so much for self-employed individuals, especially agents get audited for mileage all the time because it's your biggest tax deduction. You travel a lot. The IRS wants to bring a little bit more money in. They can just throw a bunch of audits out at people that had pretty high mileage compared to their revenue, and they're probably going to win like 90% of it because agents don't track mileage for whatever reason. I don't understand it. And it's easy for them, right? They'll put something in like something into their system. All right, we're singling out these individuals. They're a real estate agent, real estate professional. Their mileage is this percentage of revenue. Send them a letter to back up their mileage deduction. Agents don't track their mileage. They say, we don't have it, or they just, they kind of make something up that doesn't make a whole lot of sense. And then they go, okay, well, you're gonna, I mean, here's your new bill. And if you're lucky, maybe they'll just give you like a 50% haircut on it. But it it doesn't have to be that difficult. There's a lot of mileage trackers out there. Utilize technology, use your cell phone, and just sit down at the end of each week and you can just tap a button. This is business, this is personal, and just go through it. That's the new like modern day gold standard, right? Is just have an app on your phone that tracks all of your mileage. Because honestly, even if you mess up a couple of times switching between business and personal, now when the IRS sends you that letter, you're sending them a document with thousands and thousands of lines, right? And what are they going to do? They're going to say, all right, we're going to sample this. So let's sample 10 of them based on this criteria. And they go, prove that that was business mileage. Now, there's a decent chance they're going to miss in their sampling. And if they don't, as long as you're being somewhat consistent with tracking your mileage, you're probably going to hit on like 8 out of 10. Okay, so they're going to give you a 20% haircut, and then that's what you owe. That's what I really want to get across is just track your mileage, utilize technology. It does not matter if you're using the standard mileage deduction or you're using the actual expense method. You still need to track your mileage because most vehicles, they're not going to be 100% business use for an agent. You're going to run to the grocery store in it, so no one should be taking 100% allocation if you're using the actual expense method. But please, for the love of God, track your mileage. It's going to save you a lot of money. I mean, this one client, the client I was talking about, he's a commercial real estate broker. He's probably been forgiving ten to $15,000 deduction over the last 10 years because he just is terrified of taking mileage because of how much money it costs, but completely turning a blind eye to how much money he's losing by not tracking the mileage. So again, track your mileage, and you'll be good to go. Thanks.